Hi, hello, my lovable students. Welcome to BCCA. I am Banu. I am a financial accounting faculty. In the previous class, I have discussed what are ABC analysis and what is the need of accounting, and I have discussed about my books. In this class, I will show my books first of all. One second, sir. This is a concept book, sir. This is a concept book. See how colorful it is, sir. This is so colorful now. But uh, but for the hard copy, we'll provide only the black and white copies only. For the soft copy, there will be a colorful soft copy will be given. And I will show my problematic book, sir. This is my problematic book. In this problematic book, I will provide the answers also. Sir. In this problematic book, I will provide what, sir? Answers also. So, okay, sir. In this class, I will discuss about accounting basics. Then afterwards are double entry system. Then after accounting principles. These are all are what's are accounting basics only. Even though you have learned in the previous class, that means what's are in CMA foundation also. Once again, we will discuss these topics because we will be very free with us. Okay, now sir. Okay. I will discuss what's are accounting basics. So, in that, I am going to start what's are accounting terminologies. First one, what is the meaning of business? Business means a place where exchange of goods and rendering of services. So, as we all know that what is the meaning of good and what is the meaning of services. For example, any commodity we have purchased and we have sold, that is called as a good, or either manufactured and sold is called as a good. In some businesses there will be a goods, in some businesses there will be what are services. Let us take an example. Let us take an example of what are Kia Motors. As we all know that Kia Motors, what will do, sir? They will manufacture the cars and they will sell the cars. They will manufacture and they will sell. Here, the any commodity is manufactured and sold, or either what are either purchased and sold is called as good. In some businesses there will be a good, and in some businesses there will be a service. Service. For example, for service, I will take an example of what's our BCCA. Here in the BCCA, they will provide the service or they will provide the goods, sir. They will provide what are services. So, what type of service they will provide, sir? Here we will provide the education service. So, anything, if there is a good or if there is a services, then it's called as a, just wait a second, sir. I will exchange the mic. OBS.
ఫిల్టర్స్ అక్కడ ఆపండి ఇక్కడ ఫిల్టర్స్
Okay. Okay, sir. Am I audible, sir? Now the voice is clear or not, sir? Okay, no, sir. Okay, sir. Where I have stopped, sir? Here, what, sir? We are discussing what, sir? Meaning of the business. What is the meaning of business, sir? A place where exchange of good or rendering of services is called as a business. In some businesses there will be what, sir? There will be deal with the goods, and in some businesses there will be there will be deal with the services. I will take the example for the good, and I will take the example for the service. What, sir? Here I have taken example of what, sir? Reebok company. Here the Reebok company will manufacture the bat and they will sell the bat. Here from the Reebok company point of view, here the bat is called as what, sir? Good. Bat is called as what? Good. And from the BCCA point of view, there will be what, sir? There will be good or there will be services, sir. There will be a service. So Reebok company, they provide what, sir? Goods, and the BCCA they provide what, sir? Services. So I will read the sentence, sir. What is the meaning of good and what is the meaning of services? These are the article or commodity in which the business deals. In the business in which there. Next one, what, sir? These articles or commodity are either brought and sold or either produced and sold. That the commodity should be brought or sold or either manufactured or sold, then it is called as what, sir? Then it is called as a good. Next, in some businesses there will be a rendering of services. Okay, now, sir. In some businesses there will be a good, and in some business there will be what, sir? Services. Okay, if you sell the good or if you render the service, then it is called what, sir? It is called a business. From now onwards, we have to think in accounting from which point of view, sir? From business point of view. From which point of view we have to think, sir? From now onwards, we have to think from business point of view, sir. Okay, next meaning, sir. Next one, what, sir? The meaning of proprietor. Proprietor means a person who start the business. Proprietor means what, sir? The person who start the business is called as a proprietor. Next one, sir, capital. Next one, what, sir? Capital. I will take an example and I will clearly explain, sir. One second, sir. For example, we are planning to start a business. What's our Volkswagen? So here a person called as, I take a person. Here this person is called owner of the business. If the owner made the investment in the business, for example, he made the investment of 1 crore rupees. How much, sir? He made the investment of 1 crore rupees. This 1 crore rupees is called as what, sir? Capital. This 1 crore rupees is called as what? Capital. Simple meaning what, sir? Capital means the investment made by the owner is called a capital. Is called a what, sir? Capital. Sir, in which form we have to make the investment? We may make the investment in the form of cash or in the form of kind also. In the form of cash or in the form of kind. If the owner make the investment in the business, is called as what, sir? Is called as capital. Sir, in the accounting, there will be a what, sir? Principles. There will be a principle and there will be what, sir? There will be principles. These principles will be given by whom, sir? GAAP. Generally accepted accounting principles. They have given some of the principles. In that principle, there will be one principle called as entity concept. What, sir? Entity concept. What is the meaning of entity concept, sir? Here the entity concept means the business and the owner are separate persons. Business is a separate person and the owner is a separate person. That means what, sir? Here business is a artificial person. Sorry, here the owner is called as artificial person and the business is called as what, sir? Owner is called a natural person and the business is called as a artificial person. So these both are same persons or different persons, sir? These both are different persons. That means assume the business has X, Mr. X, and owner has Mr. Y. These both are same persons or different persons are this the owner and the business are both are different persons. Why sir? Because there is a concept called as what? There is a concept called as entity concept. Here the X is here the Y is making investment in the business. So that we call it as what sir? We call it as a capital. We call it as what sir? Capital. So from which point of view we have to think, sir? We have to think from the business point of view. We have to think from the business point of view. That means we are getting a cash from Y. We are getting cash from what, sir? Y. Again we have to repay na. Again we have to repay to the Y. Yes or no, sir? Again we have to repay to the Y. That means anything what we have to pay is called as what, sir? Liability. Anything what you have to pay is called as what, sir? Liability. So that means the capital is liability to the business. The capital is called, sir, is liability to business. Why is that liability? Because here the owner is a separate person and the business is a separate person. If any another person have given money to us, we have to repay na. We have to repay. Yes or no, sir? We have to repay. So that here the capital is called as a liability for the business. Next one, sir. Next one what, sir? Drawings. Drawings means I will take an example, sir. Assume he is a owner and the business. Owner and the business. Owner take away the cash. Owner taken away the cash from the business. For example of rupees 1 lakh, sir. For example, how much, sir? 1 lakh. So this cash he used for the personal use, sir. This cash used for what, sir? Personal use. Okay now. Here the 1 lakh is called as what, sir? Drawings. Here the 1 lakh is called as what, sir? Drawings. So here the owner taken away the cash from the business for his personal use, then it is called as a drawings. So I will take another example, sir. For suppose we are dealing with the mobiles. So here the mobile is called as what, sir? Good for the business. Here the owner is taking the mobile and giving gift to his father. And giving gift to his what, sir? Father. Here the mobile is taken away from the business by the owner for what, sir? For a personal purpose. So that this is called as what, sir? Drawings. So this is called as what, sir? Drawings. Now, in the case of drawings point of view, owner have to repay for us, sir, or we have to repay to the owner, sir. Owner have to repay to us. That means we have to receive from the owner. Anything what we have to receive, that is called, that means what, sir? Asset. That means what? Asset. Asset means what, sir? Anything what we have to receive is called as what, sir? Asset. Anything what we have to pay is called as what, sir? Liability. Okay, na, sir? Here the drawings, owner have to repay for us, so that we have to receive from the owner. So anything what we have to receive means what, sir? Asset. Okay, na? So drawings is called as an asset, but the capital is called as what, sir? Capital is called as a liability. So we invested for example, we invested the capital as 10 lakh rupees, sir. How much we are invested, sir? We are invested the capital of rupees 10 lakhs. And we taken away what, sir? And the owner taken away rupees 1 lakh. Totally how much balance will be, sir? Totally 9 lakhs balance will be in the business. Okay, na, sir? Because of these drawings, the capital will be reduced or increases, sir. Because of the drawings, the capital will be reduced. How, sir? If the owner invested the 10 lakhs in the business and taken away the 1 lakh, ultimately how much amount we have to pay to the owner, sir? Ultimately we have to pay to the owner of rupees 9 lakhs. So how we get 9 lakhs, sir? 10 lakhs minus 1 lakh. That means what, sir? We have reduced the drawings from the capital. So that we decrease it to how much, sir? 9 lakhs. Here the 10 lakhs is called as a opening capital. Here the 10 lakhs is called as what, sir? Opening capital. And the 9 lakhs is called as what, sir? Closing capital. Okay, now, sir. How we can get closing capital, sir? By reducing the, by way of reducing what, sir? Drawings, we are getting what, sir? Closing capital. And we have seen some more adjustments in the capital also. We can discuss, sir. Let us imagine there will be a opening capital. Yes or no, sir? For example of rupees 10 lakhs, sir. Opening capital how much? 10 lakhs. If the owner invested the additional capital, if the owner invested what, sir? Additional capital, we have to add it to the opening balance, sir, or we have to deduct from the opening balance, sir? We have to add it to the opening balance. What's our additional capital? Additional capital we have to add to the opening balances. Let us take it as a 1 lakh rupees. Total how much balance are? 11 lakh is the balance. Then after the owner taken the cash of rupees 1 lakh from the business for his personal use is called as what, sir? It is called as a drawings. We have to reduce, we have to add, sir. We have to reduce the drawings amount. How much, sir? 1 lakh. So then balance what, sir? 10 lakhs is the balance amount. Next, if you get net profit, what we have to do? If you get the net profit, we have to add to the capital. Already we have learned in which chapter, sir? We have already seen in the final account chapter. If you got the net profit, we will add it to the capital. If we get the net loss, we will deduct it from the capital. So that the net profit means we have to add, or net loss means we have to deduct it. Net loss means we have to add, and the net loss means we have to what, sir? Deduct it. Let us imagine it as also a what, sir? 1 lakh rupees. Then how much we will get, sir? 11 lakhs. How much we will get, sir? 11 lakhs. Then after interest on capital. Interest on capital. We can discuss about what, sir? Interest on capital. First of all, capital is a liability or asset of the business, sir. Capital is a liability of the business because we have to pay to the owner because of the entity concept. The owner is a different person and the business is a different person. So capital is called as what, sir? Capital is called as a liability to the business. Okay, na, sir? On that liability, if we have paid any interest on the liability, if we have paid any interest, that means what, sir? It is an expenditure for the business. It is an expenditure. It is a what, sir? Expenditure of the business. Yes or no, sir? Yes. So because of this expenditure means we have to pay to the owner or we have to receive from the owner, sir. The interest on capital also we have to pay to the owner. That means the interest on capital should be added. Interest on capital should be what, sir? Should be added to the opening capital. Okay, na, sir? Once again, I am repeating. Interest on capital means what, sir? Interest on capital means we have to pay the interest on the capital. Capital is a liability. If you pay the interest on any liability, it is called as an expenditure of the business. The expenditure means business have to pay to the owner or owner have to pay to the business, sir. Business have pay to the owner. So that it is because of the interest on capital, the capital balance will be increase or decrease, sir. The capital balance will be increase. Next concept, sir. Interest on drawings. Next one what, sir? Interest on drawings. Okay, sir. First of all, we have to see what, sir? Drawings. We have already discussed, sir. Drawings means what, sir? If any good or commodity or what, sir? Cash taken away by the proprietor from the business for the personal use. What, sir? I am repeating. If any cash or commodity or what, sir? Or kind taken away by the proprietor for his personal use, then it is called as a drawings. Sir, here taken away by the proprietor, so the proprietor have paid to the owner. So proprietor have paid to the what, sir? Business. So here business have to receive the drawings from the owner, so that the drawings is called as asset for the business. On the asset, if the interest is charged, then we will receive the interest, or we have to pay that interest, sir. On the asset, any interest means we have to receive that interest, so that because of this interest on drawings, capital will be reduced. So to conclude, because of the drawings and because of the interest on drawings, for both the things, the capital balance will be reduced. Okay, na sir? For opening capital, we have to add first what, sir? Additional capital. Then after we have to add what, sir? We have to add net profit means we have to add. Net loss means we have to deduct. Then after interest on capital should be added. Next drawing should be deducted. And then after what, sir? Interest on drawing should be deducted. Then we will get what, sir? We will get a closing capital at the year end. Okay, sir. In this class, I have started to discussing what, sir? The terminologies. In that I have discussed what, sir? The terminology of the business. Business means what, sir? A place where exchange of goods and rendering of services. And services are rendered. Okay, na, sir? So, in any place, a goods are exchanged and services rendered is called as a business. Here in the accounting, we have to think from the point of view of business, or from the point of view of owner, or from the point of view of business. Proprietor means a owner of the business. Then afterwards are capital. Capital means what's any investment made by the owner of the business is called as a capital. Here the investment can be made in any form, sir. Yes. Here the investment can be made in the form of cash, in the form of goods, or in the form of time. In any form, if the owner have invested the business, is called as a capital. Here the owner is a different person and the capital is a different person, and the business is a different person, because of the what's our entity concept discussed in the given by the generally accepted accounting principle. So that we have to pay to the owner, so that capital is called as a liability. So liability. Next, then after what's our drawings. Drawings means what, sir? Drawings means any commodity, cash, or an asset taken away by the proprietor for his personal use, then it is called as what, sir? Drawings. In the case of drawings, owner have to pay to the business. So that means what, sir? Business have to receive from the owner. Business have to receive from the owner. This is called as an asset. So asset means what, sir? To conclude, asset means anything what we have to receive is called as an asset. Because there is another definition for asset, sir. We will see here. Once again, sir. So capital discussed, and then afterwards, sir. Now we are going to discuss about the assets, sir. Totally types of assets, and clearly we can discuss here. Okay, sir. The asset means a resource owned by the business with the purpose of using it and generating the future profits. Sir, asset means what, sir? Anything we have used. For example, building, sir. For example, what? Building. If you purchase the building and we will sell, we will use for businesses, sir. For example, I am doing the business of mobile shop, sir. I am doing the business of what, sir? Mobile shop. In the mobile shop, we will sell the mobiles and we will purchase the mobiles. In the mobile shop, mobile is called as what, sir? Mobile is called as a good, but the building is called as asset. Why, sir? Here in the mobile shop situation, we will purchase the building and we will use for us. Anything we have purchased and we have using means this is also called as an asset. Sir, asset means there are two definitions, sir. First one, what, sir? Anything what we have to receive is also called as what, sir? Asset. And anything we have used for the business by way of purchasing or by way of manufacturing, that is also called as what, sir? In the both the cases, this is we call it as a what, sir? Asset. Sir, assets are classified into two types, sir. Current assets and non-current assets. What, sir? Current asset and non-current asset. Current asset means benefit is less than a year, sir. Current asset means what, sir? Benefit is less than 1 year. Or there is another definition, sir. Within a 1 year, we can convert the asset into a cash. That in that case also it is called as a current asset. I will say, sir, once again. if any asset is converted into cash within 1 year, if any asset is converted into cash within 1 year, in that situation also we call it as what, sir? Current asset. So current asset means what, sir? The benefit is less than 1 year, or how we can say, sir? We can say if the asset is converted within a 1 year, then it is also called as what, sir? Then it is called as a current asset. Now, next what, sir? Non-current asset. Non-current asset means it is also called as what, sir? Fixed asset. What is the meaning of non-current asset, sir? Fixed asset. Sir, non-current asset means the benefit is more than 1 year. Non-current asset means what, sir? The benefit is more than 1 year. For example, sir, if you purchase the building, because of the building, we will get benefit more than 1 year or less than 1 year, sir? We will get the benefit because of the building more than 1 year. So it is called as a non-current asset. It is called as what, sir? Non-current asset. I will take an example for the current asset, sir. I will take example for what, sir? Current asset. We all know that what, sir? Debtors. We all know that what, sir? Debtor. What is the meaning of debtor, sir? Debtor means if we make the credit sales. What, sir? If we make the credit sales. In the case of credit sale, for whom we have sold the goods, that person is called as what, sir? Debtor. In the case of credit sale, to whom we have sold the goods, that person is called as what, sir? Debtor. So debtor. From the debtor, we have to receive the amount. So the debtor is called as what, sir? Asset. Sir, for the debtor, we will give credit period for more than 1 year or less than 1 year, sir? We will give credit period for a less than 1 year. Most of them we will give 3 months to mostly 4 months, sir. How much, sir? 3 months to 4 months. That means within a 1 year we can convert it into cash or not, sir? Within 1 year we can convert into cash, so that the debtor is called as what, sir? Current asset. Current asset. So benefit is less than 1 year or more than 1 year, sir? Benefit is less than 1 year. So that here the debtor is called as a current asset and the building is called as what, sir? Non-current asset. Debtor is called as a current asset and the building is called as what, sir? Non-current assets. So again, see, sir, here. Those which have intended to use more than 1 year or less than 1 year, sir? Intended to use more than 1 year. Here the intended use less than 1 year is called a current asset. Using benefit or use or more than 1 year means non-current asset. So here the non-current asset is classified into let us see, sir. Here the non-current asset is classified into 3 types, sir. First one was, sir? Tangible asset, intangible asset and vesting assets. Okay, sir. Most of the guys, you know only what, sir? Tangible assets and intangible assets. In this class I will discuss what, sir? Vesting assets also. First we are going to discuss what, sir? Tangible assets. So tangible asset means which we can see and which we can touch. Means what, sir? Which we can see and which we can touch is called as a tangible asset. Let us take an example. We have taken an example of what, sir? Building. In the case of building, the benefit is more than 1 year. Then we classified it as a what, sir? Current asset or non-current asset, sir? We classified it as a non-current asset. In the non-current asset also, which we can see and which we can touch is called as what, sir? Tangible asset. So that the building is a non-current asset. That two what, sir? Tangible or intangible, sir? The two intangible asset. Okay, na, sir? Those assets which we can see and which we can touch is called as a tangible assets. Example what, sir? Plant and machinery and land and buildings. So in the case of plant and machinery, because of the plant and machinery, we will get the benefit of more than 1 year. So that it is called as what, sir? Non-current asset. That plant and machinery we can see and we can touch. So that it is also called as what, sir? Tangible asset. Next what, sir? Intangible asset. Intangible asset means which we cannot see and touch, but we can what, sir? We can feel it. Which we cannot see and touch, but what, sir? We can see it. You all know that, sir. What is this one, sir? Love. What you guys thinking about love means what? Not that one, sir. I am saying about a mother love. I am saying what, sir? Mother love. Here the mother love, we can see, we can feel, sir. Here only we can feel that love. In the same way, some kind of assets will be for the business. For those assets, we cannot see that asset and we cannot touch also, but we can feel those assets. Example, what, sir? Goodwill. Example, what, sir? Goodwill. What is the meaning of goodwill, sir? Goodwill means the brand value of the organization. Goodwill means what, sir? The brand value of the organization. Okay, sir. The reputation of an organization, or brand value or reputation, we may call like that also. Here the reputation is called as what, sir? Goodwill. Sir, here the goodwill is one kind of asset for the business. Yes or no, sir? Why? Because of this goodwill, we can run the business smoothly and we can get the credit also for others. We can easily get the what, sir? Credit purchase. So because of this, we can run the business smoothly also. So here the goodwill is, because of the goodwill, the benefit will be more than 1 year, so that it is called as what, sir? So that it is called as non-current asset. But it is a non-current asset, but we cannot see and we cannot touch what, sir? But we can feel that asset. But we can feel that asset. What, sir? Goodwill. So because of this goodwill, they are providing what, sir? Credit purchase. Okay, na, sir? Because so that the goodwill is called as what, sir? Tangible asset or intangible assets, sir? Intangible assets. Next one, what, sir? Vesting assets. Vesting asset means the asset which is related to the nature. Which is related to the what, sir? Nature. For example, sir, asset arising out of what, sir? Natural resources. Sir, in the business, we may have what, sir? Oil wells, coal mines also. Recently, we have got from one film, what, sir? KGF. In the KGF, they will show what, sir? Gold mines. They will show what, sir? Gold mines. Here the gold mines is also called as what, sir? Vesting assets. Vesting assets means it is related to the nature, then it is called as what, sir? Vesting assets. Here, even though we can see and touch, they again classified into another type called as what, sir? Vesting assets. Because of these vesting assets, the benefit is more than 1 year or less than 1 year, sir? Because of these vesting assets, the benefit is more than 1 year. The benefit is how much, sir? More than 1 year. So that it is called as a non-current asset. Non-current asset is also called as what, sir? It is also called as fixed asset. Once again, sir. Once again, I am coming from what, sir? Fixed assets are non-current assets. Those which are intended to use more than 1 year or less than 1 year, sir? More than 1 year. In this, how many types we have, sir? 3 types. Tangible assets, intangible assets, and vesting assets. Tangible asset means which we can see and touch, but we cannot feel it. Intangible means what, sir? Which we cannot see and which we cannot touch, but we can feel it. Example, what, sir? Goodwill. Next one, what, sir? Vesting assets means the assets which are related to the nature, then it is called as the vesting assets. Because of this vesting asset, the benefit is also more than 1 year. So it is classified into what, sir? Current asset or non-current asset, sir? Non-current asset. Next one, sir. Next one we are going to discuss what, sir? Current assets. Current asset meaning what, sir? The benefit is less than 1 year or more than 1 year, sir? The benefit is less than 1 year. Here they are saying what, sir? Those which have intended to use less than 1 year. So again, the current asset is also classified into how many types, sir? 3 types. How many types, sir? 3 types. First one, what, sir? Liquid assets, non-liquid assets, and next one, what, sir? Fictitious assets. Okay, sir. What is the meaning of liquid assets? Sir, the liquid asset means, here I have said the previously one definition. Within 12 months, what, sir? Within 12 months, we can convert the asset into a cash, then also it is called as what, sir? Current assets. In the same way, here within a 3 months, sir. How many months, sir? Within a 3 months, we can convert the asset into a cash, then it is called as a what, sir? Liquid asset. For example, sir, cash. Cash is already in the form of the liquid. Liquid means what, sir? In the form of cash. So cash is already in the form of cash, then it is called as what, sir? Liquid assets. Next one, what, sir? Bank balance. In the case of bank balance, we can get easily cash by way of what, sir? By way of going to an ATM center or by way of going to a bank. We will submit one form, they will give what, sir? Cash. So within 3 months, we can convert the cash or not, sir? Within 3 months, we can convert into a cash. Those kind of assets are called as what, sir? Liquid assets. That to a current or non-current, sir? That too a current asset. In the current asset also, it is called as what, sir? Liquid asset. What is the meaning of liquid asset, sir? Within a 3 months, the asset is converted into a cash, then it is called as what, sir? Then it is called as a liquid asset. Next one, what, sir? Non-liquid asset. Next one, what, sir? Non-liquid asset. Sorry, sir. Non-liquid assets. These assets cannot be easily convertible into cash. Cannot be easily convertible means what, sir? More than 3 months and less than 12 months. What, sir? Can you repeat again? More than 3 months and less than 12 months. Here they will be what, sir? Less than 3 months. Less than 3 months, the asset is converted into a cash, then it is called as what, sir? Liquid asset. Here what, sir? More than 3 months, but less than 12 months, then it is called as what, sir? Illiquid assets or non-liquid assets. These assets are not easily convertible means what, sir? More than 3 months, less than 1 year. Example what, sir? Closing stock. Example what, sir? Closing stock. Sir, let me explain what is the meaning of closing stock. You guys already know what is the meaning of closing stock, sir. Let me take an example. Generally, we have how many types of years, sir? We have 2 types of years. First one, calendar year. Second one, what, sir? Financial year. First one is called as a calendar year, and second one is called as what, sir? Financial year. So here the calendar year is starting with what, sir? Here the calendar year is starting from the 1st January. Let us assume the year is called as what, sir? 2024. Here the in calendar year will start from the 1st January 2024, and at what date it will be end, sir? It will be end on 31st December 2024. So this is the regular one. Yes or no, sir? This is regularly we will see in the daily life also. Next one there will be a year called, which one, sir? This is called as a financial year. Financial year means, as we all know, what is the meaning of year, sir? Year equal to 12 means 12 months. Year equal to what, sir? 12 months. In the financial year, the year will be starting from the 1st April, sir. Year will be starting from what, sir? 1st April. Let us imagine it as a 23-24. Imagine it as what, sir? 23-24. So its starting point is what, sir? 1st April 2023 is the starting point. From the 1st April, we have to calculate how many months, sir? We have to calculate 12 months. So April, May, June, July, August, September, October, November, December, January, February, March. So totally on which month it will be end for the 12th month, sir? March month. In the March month, the ending date is 31st March, sir. Okay. The 31st March, okay, sir. What is the year? Here the year is 2023 or 24, sir? Here the year is 2024. Why, sir? Already the 23 is over. If you write here the 23 means we are going back. If you write here instead of 2024, if you write the 23 means we are going back or we are going front, sir? We are going back. What is the meaning of back, sir? I am not understanding. 1st April 2023 is the date. What is the before date, sir? 31st March 2023 is the before date for the 1st April of 2023. Yes or no, sir? Now we are going the backward or we are going the front forward, sir? If you write here the 2023, that means we are going back. But in the case of financial year, we have to go front, sir, back. We have to go front. That means here we have to write what, sir? Here we have to write 2023 or 24, sir. Here we have to write 2023, 24, but not the 2020. We have to write the 2024, but we do not write the 2023. Okay, na, sir? We can check, sir. Up to 31st December, the 2023 year will be completed. Yes or no, sir? After that, we have got what, sir? January, February, March. That means which year, sir? That one, 2020-24. Okay, na sir. Here the year beginning from 1st April 2023, year ending from 31st March 2024. In case the financial year is 23-24. Now let us discuss financial year of 26-27, sir. 26-27 means what is the starting date, sir? First April 2020-26 the starting date. What is the ending date, sir? 31st March 2020-27 is the ending date. Okay, sir. Why you have discussed about the years? Okay, sir. Let us imagine we purchased 1 lakh worth rupees of goods, sir. How much, sir? 1 lakh. 1 lakh. At the year end, we will close the books of accounts or we will open the books of accounts, sir. At the year end, we will close the books of accounts in order to find out the profit or loss. Yes or no, sir? We already learned this concept in where, sir? CMA Foundation. In the CMA Foundation, at the time of preparing the final accounts, we will prepare at the end of the financial year, at the beginning of the financial year, sir. We will prepare at the end of the financial year. That means what, sir? At the financial year, we have to close the books of accounts, sir. We have to open the books of accounts, sir. We have to close the books of accounts. So we purchase the stock of how much, sir? 1 lakh. In that 1 lakh, we have sold only what, sir? 80,000 worth of goods. We have sold only 80,000 worth of goods. Remaining 20,000 is called as what, sir? Is called as an inventory. Is called as what, sir? Inventory. Or nothing but what, sir? Inventory or closing stock. Inventory or what, sir? Closing stock. So here the closing stock is an asset or liability, sir. Here the closing stock is an asset. This closing stock will be sold in the next year or other than next year, sir. This closing stock will be sold in the next year. In the what, sir? Next year. So that the closing stock is classified into current asset or incurrent asset, sir. Non-current asset, current asset. That to a liquid or non-liquid, sir. Non-liquid. Because there may be a more than 3 months but less than 12 months. So that the closing stock is called as what, sir? Here the closing stock is called as a current asset. That to a liquid or non-liquid, sir. That to a non-liquid current asset. Okay, na, sir? So here I have started what, sir? Current asset. That to intended to use more than 1 year or less than 1 year, sir? Less than 1 year. In that I have discussed about liquid assets and non-liquid assets. Liquid asset means less than 3 months we have to convert into a cash. What we have to convert, sir? Asset is converted into a cash, then it is called as a liquid assets. If any asset is converted into cash after 3 months but before 12 months, then it is called as what, sir? Non-liquid assets. Example of non-liquid asset, what, sir? Closing stock. What is the meaning of closing stock, sir? The purchased goods we have left out at the end of the financial year, then it is called as what, sir? Closing stock. Next one, what, sir? Fictitious assets. Next one, what, sir? Fictitious. Fictitious assets means formation expenditure. What, sir? Formation expenses. It is created by the organization for the purpose, these are not a real asset. Organization purpose, because of the organization purpose, they have created a certain expenditure, then those expenditure is called as what, sir? Fictitious asset. Example, what, sir? Account losses. Okay, sir. To conclude, I have discussed what, sir? I have discussed the types of assets. I have discussed what, sir? Types of assets. How many types of assets, sir? We have totally 2 types of assets. First one is called as current asset. Next one is called as what, sir? Non-current asset. Non-current asset is also called as fixed asset. Non-current asset is also called as what, sir? Fixed asset. Here the current asset means intention to use more than 1 year or less than 1 year, sir? Intention to use less than 1 year. Here the non-current asset means what, sir? Intention to use more than 1 year. Again, the current asset is classified into how many types, sir? 2 types. 3 types, sorry, sir. Liquid assets, non-liquid assets, and fictitious assets. Liquid asset means less than 3 months. Non-liquid asset means what, sir? More than 3 months but less than 1 month. So fictitious asset means what, sir? Fictitious means the formation expenditure, nothing but preliminary expenditure. We all say what, sir? Preliminary expenditure. This is called as what, sir? Current asset. Okay, no, sir. Next one, what, sir? Next one, non-current assets. Non-current asset means what, sir? Intention to use more than 1 year or less than 1 year, sir? Intention to use the less than 1 year. Here the non-current asset is classified into how many types, sir? 3 types. So what, sir? Tangible assets, intangible assets, and fictitious, and what, sir? wasting assets. Tangible means which we can see and touch. Intangible means what, sir? Which we cannot see and touch, but we can feel it. Example of intangible asset, what, sir? Goodwill. Next one, what, sir? Vesting assets. Vesting asset means it is related to the nature. Example, what, sir? Oil wells, bore wells. These are all called as what, sir? Vesting assets. Now I have completed what, sir? Types of assets. In this class, I have started with the discussion of meaning of business. What is the meaning of business, sir? Business means where the goods are exchanged and services are rendered. In some of the businesses, there will be a good, and some of the business there will be a what, sir? Services. Good means what, sir? In which the business deals with, in which the business, for example, sir, let us take an example of BCCA canteen. BCCA canteen. In the BCCA canteen, they will sell what, sir? They will sell ice cream, chocolates, etc. Here the shopkeeper of the BCCA will purchase the good, will purchase the ice creams and chocolates, and he will sell. Okay, na, sir? Here the shopkeeper will purchase and sell, or he will eat, sir. Here the shopkeeper will purchase and he will sell. So that the ice cream and chocolate is called as a good. In some kind of business, there will be a good or service or service. Example, in the BCCA, there will be a service or good or service. Here the BCCA is providing what, sir? Providing the service of education. So that the BCCA is a service organization but not a good organization. Then after we are discussing what, sir? What is the meaning of proprietor? Proprietor means what, sir? Proprietor means a owner of the business. Then after I have discussed the meaning of capital. Capital means what, sir? Investment made by the owner. Sir, he can make the investment, how many forms, sir? He can make the investment in the form of cash, or in the form of kind, or he may make the investment in the form of asset. Okay, sir? In any form, the owner invested into the business, then it is called as a capital. Sir, here the capital case, the owner is a different person and the business is a different person. So that because of what, sir? Because of entity concept. So here both the persons are different. So the business have to pay to the owner. So anything we have to pay means what, sir? Liability. So that the capital is a liability for the business. I have already discussed about what, sir? In the accounting, we have to think from the point of view of business, sir. We have to from the point of view of owner, sir. We have to think from the point of view of business. From the point of view of business, capital is a liability. Next one, what, sir? Drawings. Drawings means cash or asset or a good taken away by the proprietor from the business for his personal use, then it is called as a drawings. Then it is called as what, sir? Drawings. Here, in the case of drawings, owner have to repay to us. So that means business have to receive from the owner. So that the drawings is called as a asset. Drawings is called as an asset of the business. Capital is a liability. Drawings is an asset. Then after we have discussed the adjustments of the capital. So adjustments of capital, we start with the opening capital. Then after we have to add what, sir? Additional capital. If you get the net profit, we have to add it to the capital. And if you get the net loss, we have to deduct it from the capital. Then afterwards, sir, interest on capital. So here the interest on capital means expenditure to the business. Because what, sir? Capital is a liability. On that capital, we are paying the interest, means it is an expenditure to the business. So because of this expenditure also, capital balance will be increased. So that we have to add the interest on capital to the capital balances. Next one, what, sir? Drawings. Drawings should be deducted from the capital. Why, sir? Because we have taken example, what, sir? The owner have invested the 10 lakhs into the business. So, and owner taken away the 1 lakh from the business. That means ultimately we have to pay to the owner 9 lakhs. That means because of the drawings, the capital balance is reducing. In the same way, we have to think what's our interest on drawings also. Here the drawings is an asset. On that asset, we are receiving the interest. That means because of the interest on drawings also, the capital balance will be reduced. We have to deduct it from the capital. We have to add it to the capital, sir. We have to deduct from the capital. Okay, na, sir. Then after I have discussed what's our asset. Asset, how many times we have discussed? Next one, sir, we are going to discuss about the liabilities. We are going to discuss about what's our liabilities. So liabilities are classified into mainly two types, sir. How many types of liabilities are? Two types of liabilities. First one, it is called as a internal liability. First one called as what, sir? Internal liability. Next one, we called it as what, sir? External liability. Sir, don't think we already know all these topics. Once again, I am revising these topics. It will be useful to us because of understanding my language for you. Okay, na, sir? So internal liabilities and external liabilities. Internal liability means what, sir? It is here the best example of internal liability means a capital. What, sir? Capital. So amount payable by the proprietor at the time of winding up of the organization is called as a what's our internal liability? Internal liability means the amount we have paid to the owner at the time of winding up. So capital will be repaid ultimately at the time of winding up only. What is the meaning of winding up, sir? Winding up means closing of a business. Winding up means what, sir? Closing of a business. Here the capital will be given to the owner at the time of only at the time of winding up, so that the capital is called as a internal liability. All the others are classified into what, sir? External liabilities. External liability means what, sir? Other than the internal liability, it is called as what, sir? External liability. Again, the external liability is classified into two types, sir. What are those, sir? Long-term liability and short-term liability. What, sir? Long-term liability and short-term liability. What is the meaning of long-term liability, sir? We have to pay obligation to discharge for a period of more than 1 year. That means what, sir? If we take any loan from the bank, the loan given the period of 2 years, sir. How many years, sir? 2 years. That means we have to repay after 1 year or before 1 year, sir? We have to repay to the bank after 1 year. Here we have a time period of more than 1 year, so that because of the time period is having a more than 1 year, then it is called as a long-term liability. In the same case, bank have provided only 6 months loan, sir. How much, sir? Bank has provided only 6 months loan. In this case, we have to repay within a year, so that it is called as what, sir? Short-term liability. If any payment we have to repay after 1 year means that is called as a long-term liability. If any payment we have to pay within a 1 year means it is called as what, sir? It is a short-term liability. Okay, na, sir? We have the short-term liability. Best example what, sir? Creditor. What is the meaning of best example, sir? Creditor. Sir, creditor. Who is a creditor, sir? Who is a creditor? Creditor means, sir, purchases. We have credit purchases and we have cash purchases. You all know. In the case of credit purchases, from which person we are purchasing the goods, then that person is called as a creditor. From in the case of credit purchases, we purchase the goods from one person. That one person is called as what, sir? Creditor. Here the creditor will give more than 1 year credit period or less than 1 year credit period, sir. The creditor will give the credit period of 3 months or 4 months, that's all. He will not give the credit period of more than 1 year. So that here the creditor is called as a short-term liability. The creditor is called as what, sir? Short-term liability. To conclude, how many types of liabilities are we have? We have two types of liabilities: internal liability and an external liability. Internal liability means we will pay the capital only at the time of winding up, so that we classify the capital as internal liability. Next one, what's our external liability? Other than the internal liability is called as what's our external liability. External liability is classified into how many types are? Two types: long-term liability and short-term liability. Long-term liability means what, sir? We have to repay after 1 year or before 1 year, sir. Anything we have to repay after 1 year means that is called as a long-term liability. Anything we have repaid less than 1 year means that is called as what, sir? That is called as a short-term liability. Best example of short-term liability what, sir? Creditor. Best example of long-term liability what, sir? Sir, what is the long-term liability? We explain again. Okay, sir. I will explain again, sir. Long-term liability means we are obligated to discharge that liability after 1 year. We have to obligate to discharge liability after 1 year. We have taken an example, sir. What, sir? I have taken an SBI loan. I have taken a loan from the SBI. Okay, na, sir? This SBI I have given a credit period of how much, sir? 2 years. How much, sir? This 2 years. This time period we have to check from where, sir? We have to check from the date of, from the end of the financial year. At the time of preparing a financial statements, at that time we have to check the time period. Okay, na, sir? For example, year end, we have taken a loan on 1st January, sir. We have taken a loan, what, sir? 1st January 2024. We are preparing the financial statements on which date, sir? 31st March 2024. We are preparing the final statements on 31st March 2024. From here